All right, so welcome to another masterclass section, Kleino. I've been having a whole lot of masterclass series, and I'm sure that you're gaining the knowledge that you need and or the experience from our masterclass sections. So today we'll be looking at a very interesting topic. We'll be talking about a very interesting topic. We're talking about risk management. Simple risk management tips you need to know as a new Forex or a crypto trader. So it's going to be a whole lot of practical in between, and then we'll just discuss on why you need to know these risk management strategies. We are going to be starting soon. All right, so just give me a moment. Let me share my screen so we can get fully started. All right. So if you can hear me clearly, if you can see my screen, just give me a thumbs up so I know I'm talking to myself. Let's interact. Give me a thumbs up. Give me some reactions. Can I see some reactions? Or give me a number one in the chat box so that we can get started. So I know I'm not talking to myself. So can everybody hear me? All right, all right. Thank you so much, Paul. Thank you so much, Clinton. So, all right, we're getting started right about now. So, like I said earlier, it's going to be little practical here and there, and then we'll just talk about the risk management strategies that you will actually need as a forex or a crypto trader. So, all right, let's get started into it. So, before we get started, we have to probably is your first time joining us and you're asking what's Klein all about, what are we here for? And yes, make sure you stay to the end of this class. There's going to be a very exciting news. Don't trust me, don't want to miss this news. So just wait till the end of this masterclass section, and then I'm going to drop the really exciting news. Everyone's going to be so excited for this news. Trust me. So yeah, let's go ahead. So what's Klein all about? Probably this is your first time of joining us. Final, what's final about? What are we about? What are we building? What is our motive behind what we are building? So basically, Client is an edtech company dedicated to empowering individuals with the knowledge and skills to understand and navigate the world of Web3 or cryptocurrency. So basically, what this means is that is here to Panel is here to help your journey in cryptocurrency space and the Web3 space seamless. Here to help your journey in the cryptocurrency space and Web3 space very easy. You are you are literally going step by step what to the basics because as someone that doesn't know much, you don't really see the basics everywhere. All you see is mostly signal groups or mostly success stories that other people have gotten, yeah, which is very fine and which is very good. But then people that want to enter this cryptocurrency space, they can't get the real information they need. They can't get the basic information they need because it's not very readily available. So that's why Kleinel is here to help everyone to navigate the cryptocurrency space while working with the millennials, because most times the millennials they feel left out in this trend because there are not really people to set down to teach them the basics of cryptocurrency because of their busy work, their work schedule, busy work and schedule life, their families, they have families to take care of and everything. So kind of we're here to help every millennial that is willing to enter the cryptocurrency space, that really wants to understand how the cryptocurrency space literally works. So we're here to make sure your journey is easy. We're here to teach you everything you need to know, all the skills you need to know on how to become a sports analyst, on how to become a forex analyst. We're here to break it down for you step by step. So we go ahead into our topic today. Our topic today is our topic today is sorry our topic today is simple risk management tips for new forex and crypto traders. So what we're going to be doing today, we're going to talk about our topic, and then we're going to talk about our forex and spot analyst. We're going to talk about who a forex and spot analyst is, and then we're going to talk about how you can achieve success being a forex and spot analyst, and then we'll talk about our July cohorts, which is coming up on July 5th. So like I mentioned earlier, there's going to be a really nice news that's coming up at the end of this section. So make sure you stay tuned to this section, and let's have a wonderful time. If you have a question, we're going to take all the questions immediately after the section. So you can just drop your questions in the chat box. When I'm done with the section, I just take all everybody's question. So first things first, what's risk management? Because before you cannot just dive into the strategies of risk management where we don't know what risk management is. We need to know, okay, what risk management entails, what it's all about. So all right, so risk management in trading, whether you're a forex or a crypto trader, is all about knowing how to protect your money. So the basics of risk management, what risk management means is how to protect your money. It means figuring out how much you are willing to risk, setting limits on your losses, and making sure your no single trade can wipe out your account. So risk management is there to help make sure you know how to manage your risks, because definitely in cryptocurrency, nobody can get 100% um 100% win rate as a cryptocurrency trader. There are mistakes that people make. There are unforeseen events that happen. So risk management is here to make sure and to help you manage your risks, right? It's here to help you manage your risks, help to make sure that you don't lose any money, or even though you lose money, you are losing money that you plan to lose. All right. So risk management is also here to make sure that you know how to manage your losses, like I said, and making sure that you don't get making sure that you don't get wiped out, your whole account doesn't get wiped out in a single trade. So what we call this is when your account gets wiped out in a single trade, what we call it is liquidation. Liquidation is basically your whole account is being wiped out. Like all the money you have in your accounts that you used to enter that trade is going to be wiped out. If you're using the cross margin, oh, that means all your accounts in your futures trading is going to be wiped out. Or if you are trading forex, if you don't use a good SL, your money you have in your forex account is going to be wiped out. Then even if isolated, the money you used to enter the trade is going to be wiped out. So risk management is here to make sure that you cut down your losses, is here to make sure that you know, okay, what you are willing to lose, and there is also here to make sure that your account stays safe. You are able to take the amount of losses you want, because liquidation can actually happen because there are like I said, some unforeseen events that happen in the cryptocurrency space. That's what makes no one be 100% trader. So everybody needs a proper risk management. Everybody needs a proper risk management knowledge and proper risk management understanding. So yeah, so that's why risk management is very, very, very important. So all right, we go ahead. Some risk management strategies. So we're going to be talking about 5 risk management strategies, and then, like I said earlier, we're going to switch into practical a little bit where I show you how to calculate your risk and reward ratio, show you how to set it up in your charts, and yeah, it's going to be really interesting. So we go ahead. Number one risk management strategy that you should have when you're just starting up as a newbie or when you're just entering the space. Number one, you should always start small. And from starting small, you can be able to scale up. No trader enter the forex, no forex trader or no crypto trader enter the started trading without starting small, or also without using demo accounts. So this is what your demo accounts are used for. Demo accounts in both cryptocurrency and both forex trading. So you have demo accounts that you can set up that you can use to actually enter trades, right? So when you use these demo accounts, what are demo accounts, you may ask? So demo accounts are literally accounts that are not real. So you basically enter trades with fake money. If the money goes your way, the profit doesn't actually come to you, but you have learned in the process. And then if you take losses, you don't get your money is not lost. Your real life money, your real world money is not lost. So it's actually just prop money. It's like a prop, it's like a fake money, whatever English word you want to use, like to classify demo accounts. So they are not real. So, but the main use of demo accounts, right, is to make sure that you're able to understand the platforms that you're using to trade or that you want to use to trade. That's why demo accounts are really important for you to be able to. That's why you need demo accounts to start up as a trader, because with demo accounts now you can make your mistakes and then you're not getting losses, and you can make wins and then you're not actually still winning the money. But there, okay, from there you can find chart patterns that you can work for you, that work for your good, or you can find trading strategies that actually work for you. So that's why demo accounts are actually very, very important. Or then if you want to actually start small, you start small with a more with little amount of money that you know that okay, you're willing to lose, or you can lose this money, and then it will really shake you, or it will really hurt your bank account or your forex accounts, whatever. So that's the good thing about starting small. Then after you have started small, after you have gained your knowledge, after you have gained know the chart patterns that work for you, or the candlestick patterns that work for you, or you have understood your whole game in the cryptocurrency while trading cryptocurrency or while trading forex, then you can start scaling up. You start entering your real asset, real trades where you use real money to enter the trades. Then you start compounding your profits. You must not just wait for wait for you to take profit of like from 10. You just want to grow an account from $10 to $1,000 in one day. No, it's not done like that. You have to try and do compounding. You compound your money. You take, probably you just enter a trade and with $10, and then you take a profit of like $20. Next trade again, you enter with $20, you take a profit of like $40. So that's just how you do it. You try and you compound your money. Before you know, your account has already grown up a whole lot. So that's what scaling up is. So starting small and then scaling up gradually actually helps you. It's a very, very good risk management strategy. I mean, when you're starting cryptocurrency, this is like literally the best risk management strategy you can implement to help you to gain your knowledge, to help you to scale up very well, and to help to compound interest. So always use stop loss. So you might ask, what stop loss? So stop loss is literally like a limit order, or stop loss is literally like a price order that you set for your trades so that you won't lose your money totally, you won't get liquidated. So that's another risk management strategy. You are able to save, a little amount of your capital. So stop loss is needed when the price moves against you. Okay, because like I said, the cryptocurrency market is not 100% predictable, right? So what stop loss there is helps you to do, if the market is going against you and then you already set your stop loss, you know that okay, once the market hits your stop loss, you're out of the trade, you're not getting liquidated, you just lose a little bit amount of money, or the money that you're actually comfortable to lose. So stop loss is actually there to protect your money. So stop loss is literally one of the best risk management skills that you can impute, or you can have, or you can implement, right? Stop loss is very, very needed. Stop loss is very, very needed. If you have been crypto traders in the past few days, there have been a whole lot of, the market has not been really been stable, right? So if you don't put stop loss in your trades, and then you are just entering trades like that, I promise you are going to get a whole lot of liquidation because of the news that we're having of between Israel and Iran, the war that is going on. So the market is not even stable. Even the forex market is not actually really stable. So you need stop loss to be able to protect your capital, because you can't even predict if the market goes against you. Yes, you can read you can look at the charts and then use nice chart patterns, and you actually know where you're actually able to predict where this market is going to go, whether it's up or down. But then when your fundamental news comes in play, it can scatter your whole analysis, or make your own analysis void. You're not able to, your analysis won't actually stand, because fundamental news is like the real thing, right? Fundamental news can make your analysis on trades render it literally useless, because of the strong power, or the amount of how much the fundamental news affects the cryptocurrency market or the forex market. So stop loss is very important. It's one of the main risk management strategies that you actually need to implement, even as a beginner trading forex or cryptocurrency, or even as an expert. You must always use stop loss. All experts use stop loss. I use stop loss. Every expert you see there use stop loss. Every beginner must use stop loss. Stop loss is a must. It's not, you cannot bargain with it. If you want to do bargain with it, whether you use stop loss or not, I promise you, your account can get liquidated and you lose all your money, and then you start from ground zero and to start building up again. So yeah, stop loss is very, very important strategy for you to like implement. So number three, risk only what you can afford to lose. So this can actually still go with stop loss because you are setting stop loss at a point where you can afford to lose that particular money. Because you can't say you want to enter the cryptocurrency market or the forex. You can't say you want to become a forex trader or a cryptocurrency trader and now you're not ready to lose money. Even in investments, real life investments, you should always put it back at the back of your mind that you are going to lose a little bit amount of money. It doesn't matter how successful the trade is or we all know we are hoping for the best. We're hoping for the best of trades, we're hoping for the best of investments, we're hoping for the best of profits. But then life is not like that. Life is not just going up. There may be down times. So you should also know okay what you are willing to lose, right? And that's where stop loss comes in. You should know okay, I'm willing to lose $10 in this trade, or I'm willing to lose $5 in this trade, and then you can be able to enter a trade comfortably. And then when the trade goes against you, you are not really disturbed because okay, that's the amount of money you can afford to lose. Because when you are expert forex or cryptocurrencies trader, you can't lose all your trades. You can't definitely not lose all your trades. You may have two bad trades or three bad trades, but I promise you the fourth one or the fifth one is going to be something good because you are learning from your mistakes, you are analyzing the chart, you are seeing where you missed it, or if it's a fundamental news that cost you a whole lot, you know okay, when the fundamental news is off, you try to go back to the chart and still reanalyze it and see okay where you can enter a better entry point and a whole lot of other things. So yeah, so risking the price you can lose is is a very important risk management strategy. So for we see set a risk to reward ratio. So we'll do a little practical here, risk to reward ratio. So I'll just switch to my trading view so that I can show you how to actually, when you want to enter a cryptocurrency trade, I'm going to use a cryptocurrency pair, right? So that we can see how to actually set up a risk and reward ratio. So ratio of your risk to your reward. Like if you want to risk $5, how much profits are you willing to make from that $5? Is it two ratio of that $5, that is $10, or is it three ratio of that $5, that is $15? So we're going to do that. I'm going to show you how to be able to set up your calculate your risk and reward ratio. So just give me a moment. Let me share my screen for my trading view. Okay, so right, so I'm just going to share my screen about now. Sorry. Okay. So if you can see my screen, can I get reactions, chat box? Can I get one in the chat box so that I can know that I can see my screen? All right, all right, all right, all right. So this is very nice. So okay, so I'm going to show us how to set up know your risks, how to calculate your risk and reward ratio, and how to set it all up. This is TradingView. TradingView is a platform where we use to analyze trades. You can read the chart. As you can see, I have um horizontal lines. Yeah, Daniel, I'm going to answer your question later at the end of the class. So just wait a little bit. So so this is TradingView, a platform where you can use to analyze trades, where you can look at your chart patterns. You have different time frames, a whole lot. You have different time frames, a 1 hour time frame, 30 minutes, 4 hours. This is a daily time frame, by the way. So my daily time frame, they have so much tools where I can use to analyze the chart. So I can't really start explaining what these tools does and what you're actually going to need, right? But our quads that is going to come, we're going to definitely dive deep down into that. So like I said, like I explained earlier, I say I want to show us how to calculate our risk to reward ratio. So I'm going to be using a tool they call the long position or the short position. So short position is for, okay, let me just use two of them so I can try to show us what is going to happen. So this now is the long position. This is long position tool. This long position tool. I'm coming. I'll just bring out the short position tool too. All right, and I'll tell us what they're about and what they do, so we can get better clarity on it. Then I'm going to also bring out the short position. So this is just an example. It's not, I'm not predicting the market anyway. So please. So this is a short position too. So if you notice, there's a big difference. There's a difference between two of them, though they all look alike, right? Is the both red and the green section, the green parts in both of them. But I'll tell you the difference between a short position and a long position tool. So literally, a long position tool is used when you want to enter trades, long trades. When I mean you want to enter trades, you want to go long, is you're predicting that okay, the market is going to go up, or the market is going to buy. So when they say the market is going to buy, the market is going to go up, the market is going to long, it just means that okay, the market is going to go up and it's going to an up direction. So but the long position to now, this part, I'm coming, let me zoom in very well. All right, for the long position too now, you can all see a green line. So the gray line is your entry point, right? Your gray line is your entry point. Then this red part is the part we call the same stop loss. So for your this is where you position it. This red part is stop loss. Then this green part at the top is what you call your take profits. So that's basically it. Your stop loss is this red one, this red section, and your take profits is this green section. Then for the short position to the same thing. Red part is your stop loss, because when you say the market is going to sell and it's going to short, that you mean that the market is going to sell. That means the market is going to go down. So that's what it actually means. So the red part means okay, is your stop loss, and the green part is your take profit, and then the gray line that is right there. I don't know if you can see it. If I hover around it, it's going to. All right, so the gray line right here, it's your entry point. That's where you want to actually enter your trade. So you are waiting for the trade to actually hit your entry point so that you can enter it. So I said I'm going to show us how to calculate your risk and reward ratio. So all you need to do is once you have put in your short position or your long position, depends on where you are predicting the market is going to go to. All you need to do is you double tap. If you are using a desktop like I'm using right now, you double tap it, or even a phone, you just have to double tap it. And when you double tap it, it's going to bring out this page. So now I'm going to explain this page and what it actually means. So now your account size is the amount, your total account size, like you're entering a trade, a crypto trade. You say you're using $10 to enter the trade, or then you are saying you're using you're using $100 to enter the trade, or $1,000 to enter the trade. That's your account size. Then lot size right here is not going to, it's not really needed for when you're entering cryptocurrency trades, because lot size is mostly for forex trades. But then we're analyzing a cryptocurrency pair, so we are just going to do away with that. Then your risk is the amount you are willing to lose. That's your stop loss. That's where your stop loss is going to hit. Okay, so when you are having -$5, that is when you want to leave the market. Or then you can actually still change this to percentage. When you say, okay, you have you are seeing a 50% loss, you want to leave the market, that's where your stop loss is. So that's what risk actually means. So we're going to change the risk to let's say $50 risk. Okay, we're entering your account. Our account size is $1,000, and then we're willing to risk $50. So now our entry point, we can actually still find our entry point. Our entry point is $1.95 and 91. Then our profit is $2.63 and 69, because it's already set. Like I explained earlier, the take profits. So yeah, and our SL points is still, you can still see our SL points here, that is $1.62 and 12. So now I've set this up. So what's risk and reward ratio? How can we calculate it? So all you need to do when you open your trading view and you have used your long or short position and you have placed it, right? So how do you know your risk and reward ratio? How can you calculate it? Once you have set this up, it's very easy. The trading view is going to automatically calculate it for you. So now we can see here that our risk and reward ratio is 2. What 2 means is that we are losing $50. So our profit is going to be 2 times $50. That is $100. That's why here you have 110. If you take your full profits, the amount here is showing $1,000. Like, sorry, $1,100, right? That's why it's showing this place $1,100 because that's your take profits points. And then because of is $1,000 that you are putting into the trade, minus $50 of that $1,000 is 950. That's why the amount here is 950, and here it's $100. So yeah, two times your profit is two times of your loss. So if you change the loss to let's say if you want to say you're using a $10 account, it's going to still help you calculate it. All you need to do is just to input it here. We say $10, and how much are you willing to risk? You're saying, okay, you're willing to risk $5. So now it's still going to calculate the amount of profit you're going to get. Based on this is a 2 RR trade, that is 2% reward trade. You're going to get two times. You're going to get times two of your the money used to enter, because you're using times two of $5 is $10. So $10 plus the actual $10 there is $20. So you are seeing that okay, the amount you are getting from this trade, if you get hits your TP, is $20. So that's also how it is. Your risk and reward ratio is being calculated. Then okay, if you say okay, the trades can actually go higher than where it is now, so you can just use this blue icon right here and just increase it. And then we can see our risk and reward ratio has increased. It's showing that we are going to get four times the $5. Then 4 times 5, 4.34 times the $5 is going to actually give us $31. So that's just how you have to calculate it with that, with your long two, and then you can also do the same thing with your short position too. So you just have to still double click it, and then you put the amount you are willing to risk and the amount you are willing to risk, and then it just helps you to calculate it, and it shows you okay, this is a 1.74 trade. That's 1.74% of your risk. So yeah, so that's just how you calculate it. It's nothing so much, it's not so really hard, but there are a whole lot of tools that we need to dive in. But that we're going to do that fully in our July cohort that is coming up. All right, so yeah, I'm done with that. So I'll just go back to our slides. Like I said earlier, make sure you stay to the end of this section. I have a really exciting news, right? You don't want to actually miss the news. Okay, so all right, so if you can see my slides now, can you just give me a reaction so I know we are all together? All right. Thank you so much. All right, so like I said, risk and reward ratio, the amount you are willing to risk, and then the amount you are willing to gain from the trade. That's just how to set. That's just what risk and reward ratio is, and I've showed us how to set it. So that's an important risk management skill. So number two, we have here, don't over leverage. So now over leveraging is when comes to when you are trading cryptocurrency, right? So leveraging means we have different leverages. I could have shown us a practical one. That is going to take you a lot of time, but yeah, so we have different leverage. You have times 1%, or times 1%. There's no need for you to use x1 leverage. It's not really important. It's just like you're buying a spot. So you have x2 leverage, you have x5 leverage, x10 leverage, and so many more, right? So what leverage actually means is if you use x20 leverage of anything, what you're actually saying is how do I explain this? Okay, just give me a moment. Let me share my screen so that I can explain it better. Sorry, give me a moment. Um, I'll have to join with a mobile device, but that's why I said we can't go into it. But let me just explain it in a way that we can probably understand. So when it means when I say, like I said, leverage, you have from 2x leverage to 100 leverage. There are even some platforms that give you 500x leverage. So leverage is 100% times the money they are actually going to make. So let's say this is it. 100x leverage of $10 is $1,000. So if you are using 100x leverage and your trade hits full TP, you're going to get $1,000. Then if you are using 50x leverage of, let me just explain it with our trading view so that you get what I'm trying to say. All right, so sharing my screen right now. Okay. All right, so yeah, this is it. When I say yeah, using when they say don't over leverage, like I said, there's leverage from X2 to X100. That is times 2, times 100, times 500, times 250, times 30, times 50, and a whole lot of other leverage. So now, this trade that you are about to enter, you are meant to get $31. Sorry, you entered with $10 this trade. You entered with 10 with $10. Then if you use 100x leverage for this trade, or let's say use x10 leverage for this trade, that means 10 if you use a x100 leverage for this trade, that means you're saying is 10 USDT times 100. So 10 times 100 is basically $1,000. So that is the amount of money you're gaining for this trade if you use 100x leverage. But then the higher leverage you use, the closer your liquidation price is. If you use 100x leverage and you take this trade, your SL price will not actually be here because it's with higher leverage, it takes the SL price closer to you, or your liquidation price closer to you. I can have showed us a practical about this, but like I said, I have to switch to a mobile device and a whole lot of things. That's so the higher the leverage you use, the closer the liquidation price. So that's why it says here, do not over leverage. So the higher the leverage you use, the closer your liquidation price, the closer your stop loss price. But then the higher the leverage you use, the more money you actually make. So it's it's a really dangerous way. Or if you have a calculated risk, you can take the trade. But if you know that you can't actually use that amount of money, or if you don't have a lot of money to keep you in that trade, then you should not just use a high amount of leverage. So you should use a moderate leverage. A moderate leverage, like let's say X15 or X10 or X8, something like that, that is actually very, very moderate. So that's just the higher the leverage you use, the closer the amount you have to your liquidation price or to your stop loss price. So yeah, we'll go back to our slides. Okay, so yeah, all right. Okay, so like I said, the risk management strategies are number one. Always remember to start small. Then from starting small, you build your account and then scale up. Then always use stop loss. Number three is only use what you can afford to lose. Only use what you can afford to lose. Then number four, we have sets a risk to reward ratio. I've already showed us how to like set it, or to know your risk and reward ratio on the chart. Then number five, do not over leverage. And I explain what leverage is, because if you over leverage, your SL price is going to get closer and your liquidation price is actually going to get closer. So we go ahead. ISA Act. So IXA Act 2025 is an act released by the federal government of Nigeria that was signed by His Excellency Bola Ahmed Tinubu. What does the ISA Act means? What does it entail? So everything the ISA Act is summary means is just saying that cryptocurrency now is fully legal in Nigeria, and the Nigerian government recognizes cryptocurrency fully. Like, okay, well, yeah, we know that, okay, cryptocurrency, they now know that cryptocurrency is a security and is actually safe for citizens of the country to use. Though it took some time for them to realize this, but it's still a very, very good progress, because the last time this act was, or this the last time this act was reviewed, was talked upon or was worked upon, was earlier 2025, and sorry, 2007. That's like close to 8 years now. Close to 8 years now. That's the last time the act was being reviewed. So you can just make sure you like fill the form that is going up, the attendance form that is in the going right now in the chat box, so that you can come here and you can click and read the full report and know more about this. And then if you fill the attendance sheet, we are going to be able to send you this the recordings of this class and then the PDFs directly to your email immediately we're done, so that you can always revisit the recordings and know if you want to learn something, you can also sit there. All right, so 6 step strategy that helps you succeed in trading digital assets. The 6 step strategy that helps you succeed in trading digital assets. Number one, identify your parts. In cryptocurrency, you have numerous pathways, numerous things to do. You have to identify your parts. That's literally how it is anyway. If you want to make investments, yes, you can make investments, or if you want to open a business, yes, you can have multiple business, but you have to start with one. You have to gain mastery in one, and you have to know one very well before you start diversifying into other places. So number one, you have to identify your parts. Number two, you have to learn the skills that is tied to that part. If, okay, let's say in cryptocurrency now, or you want to become a forex analyst, or you want to become a spot analyst, you have to learn the skills that are tied to that. You have to know, okay, what you need to do as a forex analyst, what you need to do as a spot analyst, do's and don'ts of a forex and a spot analyst, because all these things they literally have skills you need to learn. Becoming a forex and spot analyst is not just a one day thing. It takes over time. You are getting better, you are improving yourself. Nobody became a professional forex analyst or a spot analyst for one day. That's not possible. They learned it. Learning forex and learning cryptocurrency skills is actually like a tech skill, where we have, for example, you want to learn web development now. You have to have learned your HTML, your CSS, your JavaScript, your Tailwind, Node.js for your back end, your MongoDB for your database, and a whole lot of other things that you need to learn. So that's the same thing as the forex, when you want to learn a skill in digital currency, because for you to be a forex analyst, for example, you need to know, okay, risk management strategy, actual risk management strategy, like diving down deep down into what risk management strategy is, or your Fibonacci levels, and a whole lot of other skills that you need to learn as a forex analyst or as a spot analyst. Then number three, practice simulations. Like I said, your demo accounts are what practice simulations are. You keep practicing. Remember, we said start up small and then you scale up. So you keep practicing to a point that, okay, you know that you are ready to go into the forex analyst space, or the forex space, or the crypto space head on, and you know that, okay, you'll be able to make a profit. So you have to keep practicing. Practice, like you see, like they say, practice makes perfect, right? Nobody becomes a master in one day. Nobody becomes a leader in one day. So you need to keep practicing. Then we have here gain trade psychology and risk mastery. One-on-one, how can you gain this trade psychology and risk mastery? One-on-one sections with experts, live trading analysis, navigating financial investments and mentorship. We're going to be handling all these points in our upcoming cohorts that's coming up July 5th. We're going to, there's going to be one-on-one sections, experts, live trading analysis, where you can analyze the market together with experts. Don't just drop for you calls like that. Everybody is analyzing markets at the same time, navigating financial investments. You know, okay, how to actually share your income to different places, because it's not just wise for you to actually carry all your money, all your hard-earned money, or carry all the income you have and put into the forex space or into the crypto space. No, you should have a little money you have saved up, or you should have a little money that you have for expenditures, carry out the expenses of your life or your family. So like I said, the mentorship, I'm going to be handling all these parts in our upcoming cohort. I'm going to talk more about that. The networking, you should have a community of people that you guys talk together, people are building together, like minds. There's something about like minds, a community of like minds people. They help you to improve yourself in different ways. Where you're lacking, another one that has strength can pull you up, or when you're looking at the market, you can't actually know you can't actually be watching all the cryptocurrency space or all the forex space, right? So different people, their pairs they like, or different people with pairs they know how to analyze well, like your gold, like your euros, like your British pound or your yen or your United States dollar. So there are different people that know how to analyze all these forex pairs together, and then you guys work together to help build your portfolio. And then when you're done with these five skills, you're definitely going to become an expert, and you are going to have another stream of income. You're going to have another stream of income when you have identified your parts, when you have learned the right skills, then when you carry out practice simulations, and then you have a network of people that you guys work together, a community of people that you guys work together to be able to grow your portfolio. So yeah, and then when you're done with that, you're going to definitely become an expert, and you are going to get another stream of income. So who is a forex analyst? Who is a forex analyst? So a forex analyst is like a weather forecaster, but for currency markets. Their job is to study the trends, news, and data to predict how currency prices may change. So we all know weather forecasters, right? People that come on the channels news when the news is about to finish, or your BBC or your CNN news, or they may not even come, just see like different like a breakdown, like a screen with analyzing what is going to happen, the weather condition of a particular place at a particular time. Or yeah, so that's weather for and weather forecasters actually analyze, tell you what is going to happen, like how the weather is going to be at a particular place. So and they, then they use tools to be able to analyze the weather condition of a particular place. That's who a forex analyst actually is. So a forex analyst studies the forex market, studies different currency pairs, and he looks at the pairs and knows, okay, what is going to happen. Are we going to go up or are we going to go down? So like we have here, studies the market. Studying the market also means looking at the news. Like I said, fundamental news is literally almost king, right? But like fundamental news affects a whole lot of your technical analysis if you don't get the right fundamental news. So there are different fundamental news that affects cryptocurrency. I mean, there was an FOMC news today. That's There we had other news, like you have your CPI news, that's your consumer price index news. Then you have even your news of war can actually affect your forex markets. Then you have technical analysis. What is technical analysis? Technical analysis is literally looking at the charts, like we looked at it earlier with our trading view, and then analyzing it with different chart patterns, different candlestick patterns, and knowing, okay, what is going to happen next because of, okay, I've seen this chart pattern. Why when you see this chart pattern playing, you know, okay, this is the market is going to be that short, or the market is going to be that long. So you have different chart patterns, you have different candlestick patterns, different formations in the market, different things that you can use to actually analyze the market. Analyze the market. That's why you call it technical analysis. Is actually using technical tools to actually analyze this market. The next we have predict an opportunity. So when you're done analyzing the market, when you're done analyzing the charts, predict an opportunity. Predict an opportunity. Say, okay, if USD is going to rise or USD is going to be weak, or what is going to happen to your euros, or what is going to happen to your British pound. So you have to predict the markets. Then you advise traders, or you take the trades yourself. So forex analysts actually gets jobs, or can actually work hand in hand with institutions, with banks, with even private firms, because these institutions, these banks, these private firms actually give you an amount of money for you to trade for them, for you to make money for them, and then you guys will have a deal to be able to split your profits between each other, right? So they are actually, you can actually get a job, not a job per se, but it's actually a job. You can actually get a job trading for institutions, banks, and private firms. What this actually helps you to do, because all these institutions, all these banks, all these private firms, they come in with big amount of capital. So just your little amount of money that you used to enter, you're gaining a high amount of money. You're getting a high amount of profits from the amount of money that they bring, because they enter with a high amount of capital. High amount of capital means higher amount of gains and higher amount of profit. So, and then you can also take it trade yourself. I mean, when you analyze the charts and you have seen that it's supposed to go this way, you are going to definitely take the trade yourself so that you can make yourself some money. So we're running a forex analyst course at Kleinel here now. July cohort that is upcoming. We'll be talking on introduction to forex trading, core trading concepts, MetaTrader 4 integration and application, technical, fundamental, and sentimental analysis, support and resistance level, candlestick and chart patterns, leverage and lot size and spread, risk management strategies, advanced trading strategies, Fibonacci levels, pivot points, and Elliott waves, time frames and confluence, and how to generate trading signals. So we can actually see that this is actually a whole lot. You don't just, like I said, you don't just become a forex analyst like that in one day, right? So we can see these are the topics we are teaching here at Client for our upcoming July cohorts. We already have a cohort currently running, the June cohort. So our next cohort is coming up in July. We have 1 month of learning and 1 month of mentorship, and then our classes are going to be held 11 a.m. to 2 p.m. West African time on Saturdays, and on Sundays we have 3 p.m. to 6 p.m. West African time. And then the tools we are going to be working with: MetaTrader 4, your trading view that will work with the TV like logo. Then we have the MetaTrader 5. We have the Mexi Global, we have XNS, and we have Forex Factory. A whole lot of tools that we're going to be working with. We're going to dive deep down into these tools and actually teach you how to use them. So then, sorry, excuse me. We also have who is a sports analyst. The spot analyst is like a gold trader who studies the market trends to determine when to buy and sell physical gold. But instead of gold, they analyze cryptocurrencies like Bitcoin, Ethereum, Solana in the spot market where transactions happen instantly at current market prices. So a spot crypto analyst literally buys cryptocurrency pairs at instantly at current market price, right? Or then he can actually still set limits of when to enter. But difference between a spot analyst and a forex analyst is that a spot analyst actually owns the cryptocurrency he buys. Like the forex analyst, you don't own the cryptocurrency you're trading against, or you don't own the currency pair you're trading against. You are just trading against them based on the contracts with your broker or with your centralized exchange you're using to trade. But if a spot analyst buys the cryptocurrency and actually holds it, buys those and sell high. So what does this spot analyst do? Market research, studies the market trends, blockchain activity, and news affecting crypto assets, because for each cryptocurrency there are news that affects them, because most cryptocurrencies are like corporations or are run by particular people. So if these people are facing probably court charges, or like one shitty deal or another, like how we showed like how we saw XRP that was actually very low because of they were in a court case with the SEC, that's the Securities Exchange Commission in America, or the Securities Exchange Commission. That's what SEC actually means. So we saw that XRP was having a court case with them, and then XRP was literally low. But immediately after the court case, XRP pumped back, doing about multiple percent. XRP was literally at like 30 cents, that is 0.3. And then after the court case, XRP right now is at $2.40. That's the cryptocurrency that we're actually analyzing. So we can see that all these court cases, different blockchain activity, knowing okay the volume that is happening in the trade, what are people using these particular cryptocurrencies to carry out transactions, and every other thing can actually affect these are the things that the spot analysts look out for when analyzing the markets. They will have technical analysis. Yes, a spot analyst must have knowledge about technical analysis, because it's not only good for you to analyze the market or to listen to what is happening in the blockchain of different cryptocurrency without having technical analysis. You must know how to read the chart patterns and know how to read the charts. Then we have fundamental analysis. Fundamental analysis like adoption rates, regulations, and project updates. You have risk management. Risk management is everywhere. You should also know how to manage your risks, what are willing to sell, what are willing to lose while holding that particular cryptocurrency coin. You can see, okay, when your cryptocurrency coin has gone 10% low, they are willing to close the trade. So yeah, that's what risk management means. So spot analysis, the topics are going to be we are going to be teaching you in our upcoming cohorts that's coming up July. Introduction to spot trading on centralized exchange, trading on decentralized exchange, staking, yield finance, narrative and research, risk management in trading, risk reward ratio and position sizing, trading of stocks. Yes, we are going to be teaching you how to trade stocks. Yeah, Kanye actually offers you how to teach, will actually teach you how to trade stocks because it's also good of trade. It's good to trade cryptocurrency or buying stock and buying cryptocurrency and holdings, but it's also still good for you to learn how to trade stocks, on how to identify stocks, and how to buy stocks. So trading of stocks on the traditional market. So I'm going to be teaching you that. Then our timeline is too much, 2 months like the Forex analyst course, 1 month of learning and 1 month of mentorship. Our classes are on Saturdays by 11 a.m. to 2 p.m. West African time, on Sundays by 3 p.m. to 6 p.m. West African time. And the tools we're going to be using to learn is CoinGecko, Dex Screener, Binance, CoinMarketCap, and Bamboo. So we're going to be teaching us how to navigate these tools, how to actually use these tools. So our upcoming course in July, I'm going to talk more about it. Remember, I said we're going to have a very, very interesting news by the end of this masterclass section. So make sure you stay tuned to the end so that I can let the cat out of the bag, right? So let's go ahead. So how do we position you for success here at Klein? What do we do that helps you to position for success? So here at Klein, we believe in the TS plus TPRM ratio equals to success. So your TS is your technical skills, and then your TPRM is your trading psychology, and your risk mastery equals to success. So after you have gained the right technical skills, after you actually know, okay, how to read the charts, how to know which news affects the cryptocurrency or which news affects forex analysis, um, gaining all those technical skills, and then you have the trading psychology and risk mastery, knowing how to manage your loss, knowing how to know, okay, when to take profits, knowing how to the right time to leave trades. You are actually meant to gain success. So guys, can I believe TS plus TPRM equals to success, our beautiful formula or beautiful equation. Technical analysis plus trading psychology and risk mastery equals to success. So that's it, right? What is what we believe here at Client. So our additional services are one-on-one sections with experts, like I explained earlier, live trading analysis, where you're analyzing the markets together with everyone, you and an expert and everybody in the community, navigating financial investments, where we actually have financial experts coming in to teach you how to invest your money, to teach you how to know how to manage your income well rather, where to how much percentage to place into your expenditure, how much percentage you need to place into your forex trading or your sports analysis, how much percentage of your money you need to place into savings. So actually making you to be financially literate. It's not just good enough to say you want to learn cryptocurrency, you want to learn forex analysis, and then you're not financially literate. You're going to either very soon become you lack capital. So we are going to help you to know how to become financially literate. We're going to make you we're going to give you financial literacy. The market rundown, knowing okay what the market did today, what the market is all about, and other plenty things or market rundown, which is going to be done daily, which is going to be done like 3 times a day or end of the week, where we have markets rundown. Then we have your alumni community. Remember, I said community of people help you to actually grow and actualize your vision and get better and build your portfolio. So our next cohort is July 5th, like I explained earlier. So the Forex analyst program, and the sport analyst program is going for a discounted amount of 40,000 naira for the first 20 people. You should try and save yourself a secure spot before the discount amount is finished. The full amount is 50,000 naira. full amount is 50,000 naira, but now right now there's a discounted amount. So yeah, I said there's going to be a big news after the section. The section is already over. So yeah, so the big news is a whole lot of people have been reaching out to us saying they want to actually join our program, but finances is quite a problem. That they're having like to pay once or something, like to pay once the whole 14,000 naira once is quite an issue for them. So we've been working directly with our platform where we process our payments. We couldn't accept have instrumental payments earlier because we didn't set that up on the platform where we accept our payments. But right now we've set up the platform and now we're accepting instrumental payments. So those of people that wanted to pay instrumentally, this is your time to pay, to jump on the opportunity. Remember, 40,000 naira is for the first 20 people once the spot is filled up. And now that there are instrumental payments, a whole lot of people want to take the spots. So instrumental payments, how it works is you pay your first half. If you're paying that right now, that discounted price is 40,000 naira. First pay 26,000 naira, sum of 26,000 naira, and then later you pay the sum of 14,000 naira. But then you have to pay your 14,000 naira in the space of 2 weeks. 14,000 naira in 2 weeks. So if you ask me, it's actually very, very fair. I mean, 14,000 naira in 2 weeks. I know the way the country, probably the way the country is, or you have different things you're doing with money, but 2 weeks is enough for everyone to try and raise the amount of 14,000 naira so that we can come and join our Forex analyst program and spot analyst program and learn what we are doing. So I'm just going to walk us through payments platform and how you can actually take advantage of the instrumental payments and everything. So my colleague is going to send our payment platform link to the group chats, to I'm saying the chat, sorry, to the chat box. So I'm going to just pull up the Clientel payment platform or enrolled Clientel page. Sorry, let me just share my page. Let me just share my screen rather. All right, so this is our client registration hub. Once you come here, this is what you see. This is the first page that welcomes you. So we have our social media handles on Instagram and Facebook. You can go through our social media handles and you can actually give us a follow so that you can not miss any information from us. And you can actually see what we have been building since. There are masterclass sections that we have been holding, events we have held. We held campus store events where we taught people how to trade and both forex and spot analysis. I've done a whole lot. So you can just go to our social media page and check them out. They have chats with client. Once you click on chat with client, any question you have about client, just click on chat with client. Somebody is going to be at the back end to always reply to you, then get access to our program brochures. So this is like you get access to what we are going to teach you, our topics, what we are offering you. So like I said earlier, 20% discounts for the first 20 persons to register. So if you want to pay, you just need to click on visit store. Once you click on visit store, so I'll show us how to make the instrumental payments and how you can actually make your full payment. So once you click on visit store, we can see the pay in trenches on two of them. Pay in trenches is the instrumental payment. So all you need to do is click on pay in trenches. So you see payments of this for these products. So you get a pop-up screen. So once you click on pay in trenches, you can actually see one-time payment is 40,000 naira. So if you want to pay one-time payment, so you click on 40,000 naira. Then if you want to pay instrumental payments, you click on the 26,000 naira. So you can see it here. You make two payments of 26,000 naira and 14,000 naira bi-weekly starting from today. The next payment, if you pay today, your next payment should be 2nd of July 2025. That's in your that is when you pay your 14,000 naira. So if you want to pay instrumentally, you just do this, or if you want to pay full, if you want to go for our full term plan, you just do this. So let's just click on pay instrumentally. All you need to do is click on secure seats. Then we can see the breakdown here. If you pay today, your next due date is July 2nd, 2025. And click on proceed. Then you put your full name and then email address. Please, your full name and email address is very important because we are going to actually send you a receipt immediately the payment is confirmed to your email address so that you can get access to our kits. Then you click on proceed and then you proceed with your payments. Let me just do this. So do my Then when you click on that, when you proceed with payment, you have payment method. Either you pay with your debit or credit card, either you make a bank transfer if you are not feeling safe to pay with your credit or debit card. But I assure you that it is actually very safe to pay with your debit or credit card. So yeah, that's just all it is to the payment method. So I'm just going to show us a little bit of what our classroom looks like, of how our current cohort students, what they get to enjoy, what they're enjoying, of how it is actually structured. So let's give me a moment while I share the classroom. We believe that you need to have you a need to have a well-structured pattern on what to do while learning so that you can know what to do, or you can't be lost. So I'm going to just share my screen right now. So I just show a sneak peek of how it's being organized. All right, so this is our classroom system. This is our classroom system where we can see you drop materials immediately after any class, and then section recordings are actually also still here. We've already started introduction to sports. This is the sport analysis classroom. Introduction to sports trading, we touched a whole lot on that. Then introduction to decentralized exchanges, where we talk about decentralized exchanges and a whole lot more. So this is the way it's being structured. This is the way it's being organized. Then you have classwork, grades, and every other thing. So yeah, so this is just how it is. This is how our classroom is being structured. So yes, that's all from us from Klein Up today. Please, if you have a question, just unmute yourself and talk. Or you can also send the question to the chat box so that can see it. All right. Does anyone have a question? You want to ask me any question? All right, so okay, I guess no questions for today. So thank you for joining our client masterclass section today. Make sure you try and get and make good use of the discounted opportunity that's still going on right now, because it's for the first 20 people, and right now there are instrumental payments, so it's way easier for you to make payments. So